Have you ever wondered how some people manage to multiply their money by investing while you struggle to even understand how to start? The stock market can sound like something complicated, reserved only for experts or millionaires. But it's not. In this video, I'm going to explain what the stock market is, how it works, and most importantly, how you can start benefiting from it from scratch. Stay until the end, because I'm going to give you some practical advice that could change the way you see your finances. What is the stock market? The stock market is a global market where stocks are bought and sold, which represents small fractions of ownership of companies. It's like a traditional market, but instead of physical products, financial assets are traded. Companies that need capital sell shares to finance their growth, and investors buy these shares hoping that they will increase in value. Think of a local coffee shop that wants to expand. If the coffee shop sells shares, you can buy one and become a partner. Now, if that coffee shop grows and generates more profit, the value of your share also goes up. The same goes for giants like Apple or Amazon, whose shares are available on recognized stock exchanges. With this idea in mind, let's explore how the dynamics of buying and selling work within the stock market. How does the stock market work? In simple terms, the stock market connects those who want to sell shares with those who want to buy them. To make these operations possible, there are platforms known as stock markets, such as the New York Stock Exchange or the Nasdaq. These exchanges act as virtual stages where millions of transactions occur in real time. To participate, you need an intermediary called a broker, which can be an online platform. Thanks to technology, investing is more accessible than ever. From your phone, you can buy shares with just a few clicks. If you decide to buy Tesla shares through an app like Robinhood or eToro, simply choose the number of shares, enter the amount to invest, and the transaction is executed in seconds. This process is fast, but behind it are strict rules that regulate operations. Now that you understand the mechanism, let's explore why so many people invest their money in the stock market. Why invest in the stock market? The stock market is one of the most effective ways to grow your money over the long term. Here are the main reasons. Capital growth. If a company you invest in grows, the value of your shares increases. Dividends. Some companies distribute part of their profits to shareholders as periodic payments. Protection against inflation. Investing helps maintain or increase the real value of your money over time. Warren Buffett, one of the most successful investors in the world, started investing when he was a child. His long-term approach and his ability to see growth potential in companies are lessons for all beginners. But not everything is rosy. It is essential to know the risks to make informed decisions. How to start investing in the stock market. The first step to investing is to open an account with a broker. A broker is an intermediary that allows you to buy and sell shares. Today, there are many online platforms that make this process simple, such as Interactive Brokers, eToro, or Robinhood. Step 1. Define your goals. Before investing, ask yourself, why do you want to invest? Is it for retirement, buying a house, or just growing your savings? Having a clear purpose will help you choose the right strategies. Step 2. Know your risk tolerance. Not all investments are created equal. Shares in large companies tend to be less volatile than those in tech startups. If you're afraid of market downturns, it may be better to start with safer investments, such as index funds, which replicate the performance of an entire market and offer automatic diversification. Step 3. Learn the basics before investing real money. Take the time to understand key concepts such as diversification, price earnings, PE ratio, and the difference between short-term and long-term investing. There are many free courses and resources for beginners. Example, suppose you want to invest in technology companies but are not sure which one to choose. Instead of buying individual stocks, you could invest in an index fund that includes leading technology companies such as Apple, Microsoft, and Google. This reduces risk by spreading your investment across multiple companies. You already know how to take your first steps, but before investing, it is essential to know the risks involved. Risks of investing in the stock market? Volatility and uncertainty are part of the game. Here are the most common risks. Market volatility. Prices can go up or down sharply. Global events. External factors such as economic crises or pandemics affect the value of shares. Lack of knowledge. Investing without a clear strategy can lead to quick losses. Practical advice. Diversify your investments to reduce risk. Never put all your money in a single stock or sector. Now that you know the risks, it's time to address some common myths about investing in the stock market. Myths about the stock market. Myths can hold many people back before they even get started. It's only for rich people. Today you can start investing with minimum amounts, sometimes with less than $10. It's a game of chance. Investing is not about luck, but about analysis and strategy. It's too complicated. With free resources and intuitive platforms, investing has never been more accessible. Personal anecdote. When I started, I also believed that only experts could be successful. Over time, I discovered that continuing education and patience are the best tools. With this clear, you're much better prepared to take your first step into the world of investing. The stock market is not a mysterious or exclusive place. It is a powerful tool to build the financial future you want. Every great investor started from scratch, just like you are doing today. So I invite you to take the first step. Open an investment account, spend time learning, and remember that this is a marathon, not a sprint. If this video helped you clarify your doubts, don't forget to like and subscribe for more content to help you achieve your financial goals. And now, tell me in the comments, what excites you most about starting to invest? I read you below. See you in the next video.